Welcome to the Propertybuyer Podcast, where we explore the world of residential and commercial real estate to help you make better decisions about buying, selling, or investing in all types of property. Join me, Rich Harvey, CEO of propertybuyer.com.au and multi-award-winning buyer's advocate. Our podcast features expert interviews, market trends and insights, and practical tips for navigating the complex world of Australian real estate. Whether you're a home buyer, a seasoned property investor, commercial buyer, developer, or simply curious about the property market, our podcast is for you. Join us as we share our knowledge, strategies, and experience and help you achieve your property goals. Welcome to our next edition of the Propertybuyer Podcast. The last interest rate rise was November 2023, when the RBA raised the cash rate to 4.35%. Recent inflation figures have been quite slow at coming down and prompting lots of conjecture from economists about whether the RBA will raise rates one more time to kill off inflation. Cost of living is really biting into household budgets and economic growth is quite constrained. But the housing market appears to be running at a different speed in various locations. Today, we're privileged to have Louis Christopher, Managing Director of SQM Research, to help take the current pulse of the property market and see which parts of the country are rising or falling and where it's all headed in 2025. Now, Louis Christopher is one of the most accurate property forecasters I know, and he produces an annual boom and bust report, which provides excellent insights into the future of the property market across Australia. Now, in today's podcast, we'll be discussing the real impact of interest rate rises, how to fix the housing crisis, predictions for 2025, listing volumes, the upcoming spring season, and when the next property boom will come. That's a lot, Louis, but great to have you and welcome to the podcast.
Nice to be with you once again, Rich.
Now, Louis, we have a little tradition on our podcast, which I did rope you into last year. We have a thought of the week, which I'd love your reaction to. And this is a quote by Steve Jobs, and he says, "Your time is limited, so don't waste it living someone else's life." What do you take from that?
Well, I couldn't agree with it more. And I think most business owners would have to agree with that. I would only add to it that as a business owner, or indeed if you're an employee, you are there to fulfill a need in society, in the community. So either way, we're still responsible and still reportable to the community. Whether you're a business owner or an employee, there are responsibilities there. And you cannot escape that.
Love it, yeah. I think it's also saying, don't try to live vicariously. You know, I think it's all about expectations. We all have expectations put on us. And I think at the end of the day, you've got to have good balance in your life. Have some fun, work hard, enjoy life as well. So
100%. We're only here once.
Exactly. Well, Louis, let's get stuck into it. Now, I want to talk about the impact of interest rates on property prices, but we've seen consumer confidence being really low. If you look at the Melbourne Westpac Institute, it's been bumping around about 83 points the last, more than 12 months, I believe.
Yes.
But what do you believe this impact of this higher rates over the last 12 months has really had on the property market?
I think overall it's been a dampener on the housing market in 2024. I think we need to wind ourselves back to the beginning of the year, where you may recall there was great expectation out there that we were about to have an interest rate cut. Well, it never came. And so the fact that it never came increased the uncertainty out there with buyers as well as sellers. And I think this has been the number one impact in terms of interest rates where they are. Obviously, the interest rate levels are at a point where it's been taking out discretionary expenditure out of the economy. We're seeing that, for example, in softening retail sales. So interest rate settings are doing their job. There is still a risk out there as we speak right now that the RBA will lift rates again.
When do the next figures come out? Is it in a couple of weeks' time or this week?
Next meeting is in August. And the CPI numbers, the next CPI numbers, which I think maybe you're referring to, comes out next week.
Next week, okay, because that'll be...
I think it's a Wednesday.
Because that'll be talked about all over the media.
That's what everybody's going to watch.
Everyone's hinging their bets on,
That's right, and if that's a bad number, there'll be a lot of pressure on the RBA to lift rates in August.
Yeah, you're right about the beginning of the year though. We noticed when we came back in late January, early February, there was this renewed confidence that 2024 was going to be a potential rate cut and everyone's gearing up, let's get into the market. And then it was like, put the brakes on everyone, let's just hold the horses here.
That's exactly right. And I think that confidence in itself would have concerned the Reserve Bank in terms of cutting rates too soon. They were still in the process, and they still are in the process of attempting to slow the economy down to get inflation under control.
So it seems like it's taken a long time for these rate hikes to completely, as you say, dampen demand and wash through the cycle. How long does it take for each rate rise to have its full effect? Is it a 6-month process, a 12-month process? What have you seen?
I believe there's no hard and fast rule. I mean, overall, it generally does take about between 3 to 12 months to go through the system. There's a number of other factors which are in play, which can lag the time out. For example, one of the things which is very topical at the moment is migration rates. And I think one of the reasons why it's taken a little bit longer for interest rates to have their effect in this cycle is because we've had very, very strong population growth.
We have. We'll talk about that in a minute too. But I think the other thing we've seen is building costs. I saw CoreLogic came out the other day in their Cordell report saying it seems building costs seem to have stabilised a bit. You know, they went crazy. I mean, during COVID, it cost $20,000 for a container ship to come in. You know,
Yes,
it's crazy.
The ABS has been reporting the same thing as well. That building costs are starting to ease a little, but it still has been growing. And overall housing costs, when you take into account rents, has been having a negative impact upon the CPI print, and will continue to do so for some time to come.
So the things that make up the CPI number, you know, like rents and food, and it seems like it's often a perpetual cycle. Like when petrol prices go up and rents go up, and it all keeps getting, you know, put in the mix. Like it's pretty sticky, right? This inflation.
It's sticky. That's exactly right. It runs through the economy, and it keeps running through like a recycled air conditioner, right? This is the issue that the RBA faces, and at the moment it's feeding through in terms of rents, in terms of insurance, education, health, still running through the system. The RBA has also been concerned about a wage inflation spiral, where how the community responds to these high costs is demand higher wages. And if they do receive higher wages, that puts further pressure on the CPI. So they've been avoiding that. And I think, look, they've had some success in avoiding that. Wages growth has picked up, but it hasn't overly accelerated.
Yeah, okay. And what about international events? Like we turn on the news every night and we see the poor situation in Israel and Gaza, and we see the Ukraine-Russia war and all about the US election. I mean, how do these kind of international events impact the Australian property market, do you think?
They can have a significant impact. One of the concerns we had when we put out our last forecast back in November 23 was what would play out in the Middle East. The risk being that if the Middle East really did blow up, you could see things like what we had in the 1970s, where there are restrictions on the oil supply.
Oil price shock. Yeah.
That was the number one concern from our side. And the flow-on would have been from that you would have seen a big spike in inflation once again. If we were to see a big spike in inflation once again, all the central banks, including our Reserve Bank, would have had to aggressively lift interest rates. Now, as we know, yes, we have this regional war in the Middle East, but so far there's been some periods where I've been very concerned where it looks like it's about to really blow up. But so far, there's been some containment. Whether that continues on, who knows?
Yeah. It's interesting because we talk a lot about confidence in this conversation, and the property market has got a lot of fundamentals. Obviously, we've got supply constraints and demand drivers, but there's this overriding thing of confidence, right, that really, really helps determine the direction of the market, doesn't it?
This is true, Rich, but I'm starting to see this on social media once again, just increased chatter about a potential housing crash in Australia.
Come on.
Okay.
Can you knock it on the head, please?
Highly unlikely, and I'll tell you why.
Yeah.
Okay. When we look at history and we look at, for example, the Japanese housing bubble and crash, the US housing crash, the Irish housing crash, all three of those crashes had one major thing in common, which we do not have in this country, and that was that there was a lot of speculative housing supply and construction that occurred just before the crash. So it was driven by an oversupply situation combined with a fall in demand. Okay. In this country, I think it's safe to say we do not have an oversupply of housing. We just simply don't. We have got a major undersupply, which has of course been the primary reason why we've got a rental crisis on our hands.
Well, that leads me exactly to my next question. Perfect segue there. And I want to ask you about what are the current figures for building approvals? Like, has this been improving or declining? Where do we sit in sort of the long-term trends for building approvals?
It's been declining. So we're on track for this current financial year, so FY25, to complete about 138,000 dwellings. The long-term average since the beginning of the 21st century has been more along the lines of about 160,000 to 170,000 dwellings being built. So we're well under the long-term average. When I look at approvals, which is about a 2-year lead from completion, so you have a building approval, give it 2 years and you've got a completed building, right? Those numbers from building approvals have been trending down. So what this is telling us is that, okay, not only are we going to miss the federal government's target for the first year, where they wanted to build 1.2 million dwellings over 5 years, we're going to miss it for year one. We're going to also miss it for year two. So the yearly target to hit that 1.2 million dwellings over 5 years is about 240,000 dwellings.
So you're telling me this federal government target of 240,000 new homes a year is a pipe dream? It's not realistic.
It's not going to happen.
Okay.
I think supply will ramp up as we see more social housing plans come to fruition, and that might well happen in, say, years, 2027, 2028. But they're going to miss their target. The target was 1.2 million dwellings by 2029, and so far I'd say they're going to be short by at least 100,000. And more than likely now it's looking like over 200,000.
So what you're telling me is there's basically a structural deficit coming in the housing supply, and that is no way going to lead to a crash. In fact, it's the absolute opposite. It's going to create more problems.
It's going to create more problems. That's not to say we can't have housing price falls.
Yes.
And we'll get on to that in a moment, I'm sure. But to say we're going to have an outright crash in the housing market in Australia, very, very unlikely at this point in time.
I know, look, even in my own experience in dealing with councils, trying to get approvals for townhouses, it's a nightmare. It's just trying to build anything in this country is very, very difficult.
And something needs to change.
Absolutely.
So
that's my next question. Like, if you were in government, Louis, and you had some power, what types of policies would you put forward to fix the housing crisis? You've got a green slate, here we go. You've got the whiteboard, go for it. So what would you do?
Rental crisis on our hands right now. The policy which would make the biggest change to stabilise the rental market now would be to cut migration rates for a temporary period. I'm not suggesting for a permanent period, but to cut it back to about 100,000 per annum would do the job in terms of stabilising the rental market within 12 months. That would be the first thing I'd do.
But the issue on that, right, if I may just jump in there, issue on that is simply going to be that's going to lower economic growth, right? We need migration. We need skilled migrants coming into this country, right? That's the counter argument.
We do need skilled migrants coming in, but we do not need it at the rate of growth that we had over the course of 2023, where we had 600,000 people coming in. That was just too much, too soon. So migration can be used, I think migration can be used as a good economic lever, provided it's used wisely. And there are times when you put on the accelerator, and then there's times where you should be putting on the brakes. I think we've had this period following the opening of the borders from COVID, where the accelerator's been put on big time. And I think it's time that we should be applying the brakes. That's a temporary thing.
Okay, so we drop off 100,000 or so migrants. What else do we do to fix the housing crisis?
The supply side is critical. And with that, I think taxation is a key factor we need to look at. So I'm a great believer in getting rid of stamp duty and replacing it with a land tax, a broad-based land tax.
Couldn't agree more. Mm-hmm.
So by doing that, you're actually providing more liquidity to the marketplace.
Yeah.
Downsizers can downsize, upsizers can upsize, and the transaction costs are a lot less.
Yes.
And by having a land tax, that will provide a bit of a disincentive for those who do not need to hold, for example, a 5-bedroom house all on their own.
Yeah.
So I think that would help significantly. We've had firm evidence that essentially the stamp duty system we've got from the States has been suffering from essentially bracket creep. Okay.
Absolutely.
And with that, we've seen a structural decline in property listings for the last 10 years now in the states of New South Wales, Victoria, and arguably Queensland. And I think if we were to have this change where we get rid of stamp duty, replace it with a land tax, you would see liquidity rise. And with a rise in liquidity, then there's more choice for buyers, and it should mean that you see more stable prices for the time being.
Just to sort of dumb it down to liquidity, you mean it's just going to free up transaction volumes. It's basically removing a huge obstacle. If you've got a $2 million transaction, you're going to be spending $90,000. You'll no longer have to spend that 90 odd grand to buy that property.
Absolutely right.
We really appreciate you tuning in to the Property Buyer Podcast, and I hope that you're finding our expert interviews helpful. So that we can keep providing this information and growing our audience, we rely on word-of-mouth recommendations. If you found this information useful, could I please ask you to share this podcast with your friends, family and colleagues, and ask them to subscribe to the Property Buyer Podcast. It would be a big help, and we'd be very grateful for your support. Thanks once again for sharing the links, and now let's get back to the podcast.
So that would be one of the taxation policies I would bring in. The other policy I would bring in is provide more incentives for investors to invest in new homes.
Yep.
And I truly mean investors beyond first home buyers. People don't seem to recognise this, but the housing market on the supply side do need investors. The reason is because developers cannot get the financing unless they've had pre-sales.
Exactly.
That's the bottom line. Rarely anything gets built on speculation these days. So let's encourage investors to go into new housing.
Yep.
I think that would make a change. Now, I know the state governments have been working hard to try and free up local council restrictions, and I think they'll have some success, at least here in the state of New South Wales. But I suspect more needs to be done on that front as well. And some hard decisions do need to be made about building high density in inner ring Sydney, inner ring Melbourne, inner ring Brisbane.
So to hit the nail on the head, you're talking about zoning here.
Yeah.
Basically increasing density. I mean, as you say, there's been around 35 suburbs in New South Wales, around Sydney particularly.
Yeah.
We've got TOD, we've got the Transport Orientated Development Scheme.
Yeah.
Within 400 to 800 metres of a station that
Yeah.
you can increase density. But there's a huge NIMBYism. There's
That's
also
right.
a lot of...
Not in my backyard. Let's have supply, but not in my backyard.
And look at Coringa
right.
Council taking out a full-page ad in the Fin Review saying, we do not want development, full stop.
Yeah, that's exactly right. Yet, I mean, I live in the Coringa Council area, and the area can have further development, and it needs further development. It's really short-sightedness there. The other thing I think we need to do is consider building up our regional townships.
And how do we do that? How do we get people to decentralise and move to Orange or Dubbo or whatever?
Really good question, Rich. I'm not an expert on that front. But
Minister for Regionalisation, I can see a new title for you right
now. Look, with difficulty, perhaps taxation incentives might do it.
Well, look at teachers and doctors. I mean, I think there's certain incentives they get to go and do locums for a period of time and that sort of thing. I mean, my brother, many years ago, went and worked in Menindee out in Broken Hill for 3 years.
Correct. Now, one thing we noticed during COVID, of course, you might be aware of this, is that rental vacancy rates in regional Australia plummeted. As many people moved out of the cities to get away from the lockdowns from COVID, and they plummeted. And so vacancy rates went from, many of these townships from 7 to 8% to 0% in no time at all.
Yeah.
And so the no vacancy sign went out very quickly in these townships. And it just sparked curiosity with me, like, why has that happened? And more to the point, why have we not seen building in regional townships when the demand's been there? And I think with this, the answer needs to be that developers need to reduce their risks in building in regional Australia. And it's very, very hard for them to do that because the banks have black spots where they say, no, we're not going to lend to you in this area. And a lot of regional Australia falls under a black spot for the banks.
Yes, right.
So we need to do something there, whether it's a development fund set up by the government to encourage supply to be built in regional Australia.
Great, really good thoughts there. I think another one, just going back to zoning, that I would throw into the mix there is the missing middle. We talk about medium density housing as well in the burbs.
Yep.
And again, this is a New South Wales policy which they tried to get, but the councils have sort of said, no, we're just pushing back on it. But approval for manor housing, townhouses and low-rise apartments in R2 zonings, I think will free up a lot of the housing stock, because you've got people in their 70s, 80s and 90s still living in 4 and 5 bedroom homes that don't use half the house. They want to move out and they want to stay in the local area, but there's nowhere to move to. Yep. So by providing that medium density housing stock of low-rise townhouses, I think would definitely free up a lot of the housing stock.
I agree with you, Rich. Another idea I heard as well, which I think is a longer term vision for the middle ring, is, okay, let's build over and above our railway lines. Sounds radical.
Why not?
But you've got this space above the railway lines. Yep. And if you visit other countries, this is actually what happens.
Great access.
The space is actually utilised.
Yeah.
Anyway, just an idea.
Love these ideas, mate. Fantastic. We'll get you to be Minister of Housing yet. So I just wanted to revisit migration just briefly and just ask again, the immigration impact we've had. As you said, we had, 600,000 people come in 22-23 calendar year. It was phenomenal. And we obviously saw, as you say, vacancy rates plummet. But what other impacts have that had, and what's going to be the impact on the market, particularly over the next 3 to 5 years, do you think, on that?
Look, I think with that burst of people coming into the country, I think it's actually been inflationary.
Yeah.
So the economy has got a capacity constraint. Every economy does. If you flood an economy with more underlying demand all in one go, that economy will hit up against its capacity constraints. We see it in housing, of course, through the rental market, but it's also happened in health. It's happened with education. So the essential services, which represent a big part of our economy, have definitely hit up against constraints. And so this is one of the reasons why I think migration needs to be managed. If you don't manage it, then it can potentially be quite inflationary for the economy. I think it's one of the other reasons why the RBA has been struggling to get control of the CPI.
Interesting, yeah. So do you think, what's your prediction? I mean, do you think Labor will, if they maintain government next year, do you think they'll keep migration levels the same? Or do you think if Dutton gets in, he's already talking about reducing it, do you think they'll reduce it?
Yeah, it's a really good question. I mean, it's been a political football for a long time. And the history of both major parties is it's something they don't really want to talk about.
Yeah.
But it has become more political and more topical within the community in recent times because of this surge. Now, I think Labor will actually have some success in the lead up to the election in getting the migration rates down. We know it's their policy. They've got some targets which are considerably lower than the 600,000 we had over 22-23. And I think they'll have some success with that. And I think even as we speak, we are seeing a slowdown in the rate of migration.
Yeah, interesting. Okay, well, this is a wait and see one. So I'd love you to get out your crystal ball, your boom and bust report, maybe just a few months earlier than you may release it in November. But tell us your predictions over the next financial year, over the next 12 months. What do you think is going to happen in different parts of Australia? And also, I'd love to ask, what are the X factors that you think might be out there that could impinge on the predictions you've got?
Okay, sure. So I think let's consider 2 time periods: the period to Christmas, and then the first half of 2025. So for the period to Christmas, I think what we will see very shortly is official housing price falls in Melbourne and Sydney turning into a buyer's market where we'll see some housing price falls. Now, as mentioned before, we're not expecting a crash, but I think single-digit housing price falls are somewhere between -1 to about -5% over an annual period are likely to be reported in our two largest capital cities. I say this because we're seeing leading indicators now suggesting precisely that. We're seeing it with asking prices starting to soften. We're seeing it with falling auction clearance rates as well. So for the immediate period, it is quite likely we'll record housing price falls in our two largest capital cities. I think beyond the two capital cities, so Brisbane, Adelaide and Perth, they're not showing any signs yet of a significant slowdown. We initially had our forecast for Brisbane, if I recall the numbers, of a price rise for 2024 of about circa up to 8%. And I think Brisbane's going to do more than that now.
Interesting. I can pretty much just on the ground, because I'm at the coalface and all my team across different states as well. We are absolutely seeing exactly what you're saying. It's not a massive pullback. Buyers are being very cautious at the moment. But going to some auctions, I was at an auction just the other week in Lane Cove, and I kicked it off pretty low, so I managed to keep it back. But we're definitely seeing people having a harder stop at auctions. And we're definitely seeing some price adjustments, which you never saw during the boom. It was always price adjustments upwards, not downwards. So I think vendors that are out there have to be really realistic about the price. It's still a competitive market, don't get me wrong. It's not a complete buyer's market. It's just, as you say, turning more toward a buyer's market. But tell me about next 2025, after we've turned the Christmas corner.
So the key for 2025 will go back to the central bank. Will we see an interest rate cut eventually? And when will we see it? Now, if we were to see an interest rate rise, then for the first 6 months of 2025, the housing price falls we speak of in Sydney and Melbourne will continue on to the first half of 2025 and will likely spread to other capital cities. An interest rate rise would definitely dent confidence further. There'd be a fall in discretionary spending again, and that would translate to less buyers in the housing market. That combined with the slowdown in migration would cause this slump in the housing market. Once again, I stress it now, it's not going to be a crash because of the genuine shortages we've got, but it will be a buyer's market for a 12-month period, essentially starting now, if we were to see that interest rate rise.
All my clients should be very happy to hear that. So I'm actually hearing, as we sit here, I'm thinking this spells opportunity. I've been talking to my clients a lot about Melbourne, and you might have seen the Finnery article today. It's saying, Melbourne is going to be it's very counter-cyclical, but that is a great opportunity to potentially buy and hold for the longer term.
Melbourne's been underperforming for some years now. And
big COVID hangover.
Big COVID hangover, some adverse taxation changes as well. But there will be a time when Melbourne does come back. I don't think it's going to be in the immediate future though. I think right now Melbourne residents are focusing on the cost of living and the chances that the cost of living are about to rise, especially with the risk of a rise in interest rates.
But this is where I try to teach my investors to take a much longer term view. You need to be holding properties for 7 to 10 years, right? And if you were to come into Melbourne literally in the next 6 months, probably at the lowest point potentially of its cycle, you are set for the next rise, as we talk about. But you've got to have the cash to do that. So you're not going to get the high yields that you're getting in Brisbane or Perth, for example, but you've got to have the ability to hold a negative.
I agree with you. And I think in all this, yes, we do forecasting for housing prices, but I can tell you now timing is very difficult to get right in the market, and it is time in the market.
I agree with time in, absolutely.
That said though, I think over the next 6 months, there'll be some good opportunities for buyers, and the market is not about to suddenly take off anytime soon, unless the Reserve Bank turns around and actually does an interest rate cut. That could spark things, of course.
Do you have a thought in your mind of when the rate cut might come? I've got one in my head.
Not this time, not this year anymore. So we were initially thinking maybe the end of this year. No. Potentially the first half of 2025, potentially. But we've got to see some better inflationary prints. But I think when we go into 2025, it'll be very clear, for example, that migration rates have slowed right down, that there's a lot of uncertainty in the economy, and that will translate to slower, again, discretionary spending. That should bring in some more favourable prints on inflation, which will then encourage the RBA to cut rates. That, as well as we need to consider what's happening globally, that there's actually now some countries that have already entered into the interest rate cutting cycle. And when we see more countries enter into it, that will put further pressure on the RBA to join them.
Yeah, got it. I'm predicting February, but here it is on the record. But again, it's going to depend.
Okay.
That's my prediction. But I agree with you. I think it's going to stay on hold probably the rest of the year. I was predicting originally a November, December cut, but because it's been a bit sticky and wobbly, who knows? Next Wednesday we'll find out what the inflation print is, and we'll see from here. But I reckon February next year is the first.
Look,
cut.
if the number is okay, the RBA should stay on hold. If the number's bad, there'll be a heck of a lot of pressure for them to lift rates, because the CPI number's been accelerating again in recent months.
That's what they said they're going to do. They won't hesitate to pull the trigger. So we'll wait and see. So I want to ask you about your previous predictions and just how accurate they've been. I mean, you're one of the few forecasters that has the tenacity and the ability to basically say, I was slightly wrong here and this happened, and you've got a range of predictions. But how accurate have been your forecasts over the last couple of years?
I've been happy with them in more recent years. We had a bad year in 2018. I was way off. We said the housing market would slow down, but it fell. The 2020 year was an interesting one for us. Obviously, we didn't predict COVID.
No one.
We did predict that housing prices would rise that year, and they did in the end, but I think there were so many X factors that played out that anything could have happened that year. We gave ourselves an 8 out of 10 for our 23 forecast, so our base case forecast came in for most cities last year, which we're happy about. And for this year, looks like we're going to undercook the rises in Perth and undercook the rises in Brisbane, but I'm increasingly confident we'll get it right for Sydney and Melbourne. We're confident we've got Canberra right, we're confident we've got Adelaide right, we're confident we've got Hobart right. So to restate the forecast we had for Sydney and Melbourne, which we put out in November, was that we were expecting a flat to falling housing market in those two cities. Markets started off a little bit stronger than what we anticipated, but it's coming back to our forecast now as we speak.
Got it. Okay, fantastic. Talk to me about listing volumes. What are you seeing in terms of trends? We talked about listing volumes going down over time, but in the last 12 months and next 6 months, what are we seeing going forward? What are the trends in listing volumes? They've
been picking up. And so we've seen more new listings over the course of 2024 than what we've seen over the course of 23. That's been particularly the case in the market of Sydney, to a lesser extent Melbourne as well. Days on market though has blown out a bit more. So yes, there's been a rise in listings, but it hasn't always translated into more sales.
Okay. And just on the back of that, delinquencies and
yes,
mortgages in arrears, are you seeing any evidence of distressed selling, and what are the figures for delinquant mortgages?
Yes, you might be aware we've got a distressed listings index and report that we put out there for our audience, and those numbers have actually been surprisingly benign. So across the country, we're reporting about 6,000 listings which seem to be selling under distressed conditions. That is out of a total number of some 270,000 listings. So it's relatively small fry in the scheme of things. We're definitely reporting less distress activity now than what we did prior to COVID.
Interesting. I'm sort of seeing out there myself, I wouldn't say distress selling, but certainly there's a couple of motivated sellers, people that have kind of maxed out mortgages and go, you know what, I can't manage the stress, and we're seeing that. And
that's true, Richard. I think we've seen some of that, but recall about 12 months ago there was a great fear of the great mortgage reset.
Yes, the mortgage cliff, as they call it.
The mortgage cliff.
Coming off fixed rates and then
didn't happen. Didn't happen. I mean, look, I think there's no doubt there's been homeowners which have been under stress, but we must remember in this country that the principal place of residence, the home, is the last thing that sells.
Exactly.
When you're trying to cut back expenditure, you will stop going to restaurants first. You will stop the holidays first. You will sell a car first. You may sell the investment property first, but the home is the very last thing that goes.
Exactly. People hang on for good life, and we have full recourse mortgages, unlike in the States.
Correct.
As well. Tell me about spring. What do you expect the spring season to be like in terms of market activity? Is it going to be active or subdued? What do you think the volume of
I think we'll see a
transactions
rise in, we normally get a rise in spring listings, and I think we'll see the same thing again for our largest capital cities. Clearance rates will continue to fall from here, in my opinion. So as you know, SQM Research has its own auction clearance rate series. We've just been recently reporting in both Sydney and Melbourne that clearance rates have fallen below 50%. So we've got Melbourne now running at 45% and Sydney running at 48%. Historically, those type of numbers on our series have represented price declines of about 1 to 4% on a per annum basis. So we're quite confident that the market will continue to slow. There will be a rise in listings and clearance rates will fall from these current levels.
Okay, something to watch. Love the way you track those trends. I love getting your newsletters and just watching those listing volumes.
I don't think many people actually know how we put those clearance rates together, but it's actually a very strong methodology where we're very confident we're actually getting all the records, all the listings.
Fantastic.
We monitor it online. That's how we're managing to do this.
Brilliant. Tell me about the rental market. What's happening with rents in each city? Are rents rising, toning down? Are vacancy rates still going to stay low for some time? What's your thoughts about the trends there?
Yeah, so the rental crisis is still very much with us. We have a national rental vacancy rate of 1.3%. Sydney's running at about 1.7% now, if I recall. Melbourne's running at about 1.5%. They've actually been, vacancy rates have been rising in more recent months as we've gone into the winter period, which is a traditional period where you see a bit of a lull in the rental market. But we should start to see rental vacancy rates fall once again in the second half of the year as we enter into spring, which is traditionally a period where there are more renters in the marketplace. So in terms of the rental crisis, I think it's still going to be with us for some years. We've talked about the underbuilding that we've got now. We're still going to have, despite the slowdown in migration, a fairly strong population growth rate overall. But one thing that I think will change, and I think is changing as we speak, is that a lot of the negative news for tenants has now been priced into the rental market. So the days of 10 to 20% rises in rents, I think, are now behind us. And it's starting to show up in our numbers now. We're actually recording some rent declines in Sydney, for example, from their very high levels. Right. And it's the case now in Melbourne too. So I talk about being priced in. So you can have a shortage in the rental market, yet rents have essentially stabilised because all that bad news has been priced in the years prior.
The other thing, like in Queensland, they've just introduced new laws that even if a tenant is leaves their rental property, it's still on a 12-month period, but you can't put up rents more than once within a 12-month period. So there's going to be some lag effect too for when landlords can actually increase rents in that state.
There is some lag there. I agree, but I must say that I'm not a proponent of rental restrictions in the market, caps on rents, anything like that. This is crazy. It's actually counterproductive.
Exactly. It's going to force them up longer. I have one last very big question for you, Louis, and that is, when do you think the next big property boom is coming? and what will be the main drivers of supply and demand to drive that? Because I remember years ago you used this great expression, we're going to have the mother of all property booms. I can't remember what year it was. I thought it was a cracking comment. But do you have any kind of predictions or thoughts on when we're going to see a significant boom in the next decade? Like, is this undersupply that we talked about earlier, is that going to come to fruition in 5 years? Is there, if migration gets turned down and gets turned up again, if builders don't, get the DA approved and they just can't afford to build them, are we still going to have this problem? What do you think?
Richard, I'm not so sure whether we're going to get a mother of all property booms nationwide, not unless the Reserve Bank of Australia aggressively cuts rates back towards, say, 1%. And I think that's highly unlikely for the time being. But could we see a situation where you have certain cities continue to outperform in, say, the high single digits over the next 5 years? Well, I think so. I think Brisbane's going to be one of those cities where we're going to see long-term outperformance compared to Sydney and Melbourne. And Perth is another one as well, though I think there are probably there's some more risks over Perth. We know, of course, the Perth housing market has been tied to the overall global commodities market.
That's it.
That said, though, one big change which has occurred with the state of WA is that they have, for the last 3 to 4 years now, I think, been receiving a larger percentage of the GST pie. And that has been helping the state tremendously. And it's still with the state of WA as we speak. So I have more confidence, despite the falls in iron ore prices we're now seeing, that the state of WA's housing market is likely to continue to outperform. So these are the two cities in particular. I think relative affordability is a big factor. Adelaide can do well, but I always scratch my head in terms of its outperformance, because you look at the South Australian economy, there's not a lot of fireworks there. Quite frankly, there just isn't. But one thing that South Australia does have, and the City of Adelaide definitely has in spades, is affordability.
Yes.
And I think people are moving to South Australia to pick up on that affordability factor. People need to also be cautious, though, that it could be more difficult to find a job in Adelaide when we have a major economic slowdown.
Got it. Fantastic. Well, Louis, that's all my questions, but thank you so much for your insights today. It's been fascinating. You've helped solve the housing crisis. You've given some great predictions. You've given some really good intel.
Oh, no, I'm glad to help out, Rich, and hopefully your audience has found some value in it.
Yeah, thanks again, Louis. Really appreciate it.
Thank you.
And thank you, everyone, once again for joining us on the Property Buyer Podcast. We'll be back with another episode very soon. Bye for now. Thanks for being with us on another Property Buyer Podcast. If you have a question you'd like to ask, please click on the SpeakPipe link and we'll answer this during the next episode. If you're looking to buy a residential or commercial property in the near future and would like to get the added advantage of having a buyer's advocate on your side, then please reach out to my team today and send us your inquiry, and we'd be delighted to help. Please visit our website at propertybuyer.com.au, where you can stay updated with all my latest market updates, weekly blogs and live suburb profiles to help you make better property decisions. We look forward to connecting with you again on the next Property Buyer Podcast.